So Rory McIlroy won another green jacket. Golf clap. Congratulations, Rory. It's fantastic that you got back-to-back wins. A very, very small group of golfers have done just that. And it's pretty cool to see you win back-to-back jackets. When I remember the first time, I think it was the first time you were at Augusta and you were in a good position until number 10. And the second 9 on Sunday at Augusta is a crazy place. But this is not a podcast about a tradition like no other. Welcome to Covering HOAs with One Hot Mic. So I've been out in Arizona talking to some folks out there in the Mesa area, and we were talking about the difficulties that a board of directors has with respect to the CC&R language. In particular, the coverage the association has to purchase per the document, because the document says you got to buy stuff to insure the inside of someone's unit. We call that walls in, by the way. We're all inclusive, all in, basically everything that was first installed, everything that was or has been upgraded either by an existing resident or a previous owner who's resold the property to somebody new. Built in 1980. Somebody buys the original unit, and then in 2000 they remodel it, they sell it. Walls in insurance is a policy purchased by, or coverage purchased in the policy for the HOA that covers all of those original installations plus the improvements. You could argue that you don't need to carry a property insurance policy on your own, an HO6, but we'll get to that. Now that relationship was a good thing when condominiums were first kind of coming online. Concept of insuring interior property wasn't really a big deal because we didn't have any experience with losses, and no one really understood or anticipated what the market was going to do and how the market was going to change. And back then, the deductibles on HOA policies were $500, $1,000 per claim. Plus, there was a pretty good, beneficial economy of scale for the association to buy insurance for everyone, or as it's stated in most CC&R, for the benefit of the membership. So the association collects assessments. A portion of those assessments pay premium on behalf of the owners, and that policy that is purchased provides coverage for the owner's property. The HOA is essentially acting as kind of a middleman to make sure you have insurance. But it's really not an equitable thing. If I don't do much to my unit, but you completely upgrade your unit, we both have the same coverage. And I'm paying the same premium that you are. And if you have a claim, you're going to get a lot more from the insurance company than I am. So it's not real equitable, at least in my mind. The alternative to that is bare walls. Bare walls means nothing on the inside of the unit is covered. The association's policy provides insurance from the exterior of the building to the interior surface of the drywall, and that's it. No paint, no flooring, no cabinets, no kitchen countertops, no bathroom fixtures, no plumbing fixtures of any kind. You get a gray gypsum board wall, concrete slab floors, and that's it. But it's more equitable because you need to buy insurance for your own property that you have inside of your unit. You need to assess what that cost is or what that limit would be, and therefore make the purchase to that limit. And I do it to my unit. So I buy insurance that covers my stuff, and you buy insurance that covers your stuff, and your stuff is more valuable than my stuff. So you're paying more premium by and large. Maybe you have a great deal. Who knows? Whatever. Point is, you're buying insurance for your property. And again, that makes sense. So back in the day when we didn't think about it with the walls in and everybody was a walls in policy, well, what started to happen was claims started to get filed because the property that is insured, or the insurance that steps in first, is the association's insurance policy. It is primary. Sometimes it says that in the CCNR, and older ones it probably doesn't say that, but it doesn't matter because lenders will not lend on a property unless the association's policy is primary. It's their property and they want to make sure it's taken care of. So they're going to decide the association policy. They're going to tell us if it was the chicken or the egg that came first. It's the HOA policy that comes first. And then once coverage is exhausted out of that policy, or once proceeds are exhausted, then the owner has to go in to their own coverage with that purchase of the HO6 condominium unit owners policy that should be written to mate well with where the HOA policy is going to stop or leave off. And the owner can use their policy, pick it up from there, and their carrier will pick it up from there and take care of the rest if it's a covered loss. I'm not getting into not covered losses right now, but if it's a covered loss. So as claims start to get filed on an HOA policy, insurance companies start to say, hey, we're not totally down with that because we are paying too much in claims and we're not collecting enough in premium. And this is a business and we have shareholders. So we need to make sure that we're collecting more in premium than we're paying out in claims. So they say, we're going to make some adjustments. We're going to increase your policy premium, your HOA policy premium, because you're having more claims. In response to that, association said, well, how do I mitigate that higher cost? What if I have a higher deductible? And so deductibles went from $1,000 to $2,500 to $5,000 to $10,000. And now we're looking at $25,000, if not $50,000 deductibles per property claim on the average, wherever you live, in whatever state. Because the insured said, I don't want to pay all this premium, but if you give me a discount for taking on more of the loss, then I will pay a little bit less premium and I can stay with you. $25,000 is a lot. $50,000 is double that. If my math is correct, times two. Yeah, $50,000 is a lot more. Did it really protect us insurability? For a time, it did. For a time, communities got a little bit nice break on their premium, and claims were kind of kicked down the road. That is, kicked back to the unit owner, because if there's no coverage on the HOA policy and the HOA policy is first, then the unit owner is going to take care of the damage because it was mostly probably done inside their unit. There's the HOA property that needs to be fixed. The HOA needs to spend money to do it. But most of the property that's damaged is inside the unit. So the unit owner, who is responsible to repair, maintain, replace that property, is going to be responsible to pay the cost to do just that. So owners, even in a walls in situation where the association's policy has insurance for everything that's on the inside of the unit, you still need your HO6 condo unit owners policy because you have this exposure to the repair costs that are equal to the HOA policy deductible. You have an exposure to your own personal property. Pick your unit up and flip it over. Everything that falls out is your personal property, personal liability, loss assessment, and additional living expenses or loss of use. Those are things that you all get through your HO6, not just insurance for the property that's attached to the inside. Now, if you have a bare walls policy, you absolutely need this thing, because if your HOA has a bare walls policy, then you absolutely need an HO6 because you have no insurance for what's inside. The association did not buy that for you. So that's the difference. In the middle, because we're talking about it. In the middle is something that lenders coined single entity. It's not an insurance term, but we've adopted it because lenders kept using the term. So fine, whatever. You call it what you want to call it. It's walls in, excluding improvements. That's what single entity means. It's the walls in stuff. But if you've made improvements or a previous owner has made improvements to the property on the inside of the unit, then that's not covered by the association's policy. That is the responsibility of the unit owner. So in a case like that, it's really hard to draw the line between what the cost to put the original fixture in was and what the cost of the upgrades were, unless you did the work yourself or you were the one who did the remodel, that is paid for the remodel. I tend to advise that an owner lean cautiously with the coverage for the interior fixtures and improvements. And by that, I mean, kind of go towards the bare walls world. Buy more than you don't try to get that line exact. You don't know what the cabinet, the floor covering, the countertop, whatever the adjuster at the time of a loss is going to choose to say, this is what the original fixture is or costs, especially on older units. You just don't know. So I recommend, unless it's walls in, completely walls in, treat it like a bare walls policy. And so the conversations that I've been having with boards recently is, okay, we need to find another way to mitigate increases in premium. The mitigating insurance premium used to be about deductibles. And unfortunately, in the market today, carriers are doing less and less, hey, I will insure you for X dollars, or I will give you a break if you have a high deductible. If you want me to insure you, this is the deductible you have to have. That's the only way we're going to insure you. So raising the deductible isn't so much a mitigating step anymore. The largest, fastest, biggest money savings is going to be to reduce the limit of insurance. Can't do that. Need to insure to 100% of the replacement value and per the CC&R. And if the CC&R says you got to have walls in, then we need to fix that CC&R so that it's bare walls. That's not an easy task. That requires a vote of the membership. It's a significant percentage of respondents among the membership. There's numbers that are like, I hear sometimes 75%, I hear 66%, 67%. And I'm not an attorney, nor am I an inspector of elections, so I don't follow necessarily the nitty gritty of that. But it's about how many people actually respond. And of those, in order for us to make quorum, that is, in order for this vote to count, a certain number of members have to respond, a certain percentage of members have to respond, a certain number of those responses need to be in the affirmative to make the change. Otherwise, your vote failed. There are some steps that are not vote driven, but it takes a long time to get there. That is, the association needs to try multiple times to get the vote. And if they don't, they can petition the court to allow the change. I've only seen that work once. It was necessary because the association was not going to survive. But like I said, I've only seen that work once. I'm sure it has worked more often. It's just hard to get there because you have to spend all that money in redelivering and recounting all the ballots. And some states have some really, man, there are new laws, new rules, but they are archaic thinking on how you have to process a vote of this kind anyway. Can't do it electronically. I can vote for the president electronically, I think. But I can't vote for a CC&R amendment electronically today, 2026. I'm talking to you on a computer and I can't vote electronically. Anyway, in order to mitigate that premium, in order to protect the insurability of the community, the best move is to go to a bare walls policy and let the owners buy insurance for their property, the property on the inside of their unit. The fight back question, the pushback question, at least one of them, one of the early ones is, well, all we're doing is transferring the cost of buying insurance to the unit owner, not the HOA. So they're really paying the same amount. Yes and no. I have different fixtures, improvements, and values than you do. So we should be paying premium that covers our property, not paying a share of the premium for the coverage that takes care of everybody's property. The other thing is, in an HO6 policy, the cost per thousand of coverage for the property inside your unit, say the floor coverings, cabinets, countertops, that sort of stuff. We call it building property, real property. Sometimes it's called additions and alterations. Sometimes it's called improvements and betterments. It's the stuff that's stuck inside. Depending on your carrier, that cost is somewhere between $2 and $4 per thousand. If I have $100,000 worth of coverage, and let's split the difference and just go to $3 per thousand, I'm going to spend $300 a year on insurance for that property. I promise you, you're spending more in association assessments monthly than you are annually. It didn't used to be that way, but it is now. That is, you're spending more monthly in assessments than you would annually in insuring the property yourself. And it makes sense. It's equitable. It makes sense. Is there a provision in your CC&R that says, thanks for being a member here, you have to maintain your car, but we'll insure it for you? You're welcome. No, there isn't. Because that doesn't make sense. What makes sense is you insure your stuff. You take care of your stuff. So when you're looking for a real cost savings in a condominium community, consider a CC&R revision, because that's really where you're going to find the money. How do you make them more successful? You might ask. Lots of town hall meetings, lots of conversations with legal counsel, lots of opportunity for homeowners for members to ask questions, either in person, via email, chat room, whatever. But not everybody's going to be able to or want to come to the first town hall. And don't just show up with a ballot. Don't just mail out ballots without telling anybody. Why? Get the language ready to go, the language from your general counsel, get that language ready to go, and then hold a meeting, town hall meeting. This isn't a board meeting. This is a town hall. We're just inviting everybody. This is the ballot measure. This is what we're voting on. This is the why. We can protect insurability and save some premium. And it's typically about 20% premium that is saved just by making this change. So your assessments aren't going to go up again dramatically. Hopefully we are avoiding future claims and protecting the association's insurability in that fashion. And yeah, maybe we have a claim, but then that's why we have insurance. We have a big loss, we have a big fire. That's why we have insurance. But we don't want the carrier, the HOA insurance carrier, to be the one footing the bill for water damage to the inside of one person's unit. have a town hall, invite your insurance broker, invite legal counsel, and before the ballots go out, try to make sure that everyone has had a chance to ask their questions and get them answered. And that means going door to door if you have to, because that'll get the job done. Door to door. Hey, Sally, I know you weren't at the town hall we had with the insurance broker, but I wanted to give you this piece of paper. We write them up all the time on the why. Why are we suggesting this change? You didn't have a chance, but I want you to have this information. And if you have any questions, feel free to call community management. Broker put their phone number and email address on this form. So they said, call them. If you call them or send them a message, send them a message if you have any questions, and then ask for the vote, call for the vote, send the ballots out. You will be more successful in that first run. It never fails that you're doing the right thing. You were elected to the board to do the right thing. You're doing the right thing for your community. And as soon as somebody says, well, that's not what I want you to do, they're going to raise holy hell and say, I want this board to be recalled. Happens all the time. Because somebody says I could have done better. Well, then why didn't you run in the first place? Serving on a board it's a thankless gig most times. I've seen some really, really well run boards, and I've seen those communities really respect the board members. But you have to treat it like a job. You have to treat it like you're the board of directors for a multi-million-dollar not-for-profit corporation. Because it's a nonprofit that is your HOA, and it's a corporation. And if you run it by making business decisions, run it as a business, you're going to be more successful in that role. But that does mean communicating more often. I never knew you guys were contemplating this. Really? We've been contemplating this change for 4 months. And you have a chance to come to a board meeting and observe and even ask questions in an open forum. And you didn't. So if you had, you would have heard that we were looking into this, because we're looking for ways to protect our community as the board of directors. So, like I said, it happens all the time that somebody says you didn't do it right and I could have done better. Okay, come on. There's typically a spot open on a board of directors. Many times do I see boards that should be 5 or 7 members and they're one short. That doesn't mean they can't operate. It just means they have to work on some logistics when they do make decisions. But this is the way we're going to, in a condo community, this is the way we are evolving. We are moving much farther towards everyone insure your stuff. We're not going to be collecting money and then paying for insurance on your behalf. Everyone insure your stuff. So when you see that ballot, or as a manager, when you are trying to figure out ways to potentially save some money, find some relief in the budget, and you are a walls in insured, try this. Talk to the broker about that, about changing from walls in to bare walls. Before we close up shop here today, be sure to like, follow, subscribe so that we can continue to do what we do, because this is fun. I like it anyway. I'm enjoying myself. Your support is really helpful. Thank you. Got some sad news today. A colleague passed away. I didn't know him very well. Like, we weren't really close. I knew who he was. I'd worked with him a couple of times. So the sad news, obviously, is that he passed. The sad news is that his family is now mourning him or mourning his loss. But it's impossible not to have it remind me of my own mortality. I've struggled with a lot of things in my recent past, and mainly being stress, depression, anxiety, stuff like that. And so when something comes like this out of the blue, I sit back, take stock. Who am I? How will they remember me? Will it be positive? Have I said everything I want to say to everyone in my life that I love? Because I don't want to be the guy who leaves this world and you didn't know how I felt about you. I've been to those services. I wish I had another chance to talk to Mike. I don't know if he knew how much he meant to me. So I implore you to go do just that. Nothing's guaranteed. Not even the next 10 minutes. Go hug your family. Go look in the mirror and be proud of who you are and what you are bringing to the world. For me, that's my legacy. How did I leave this place better? And when you do something like that, I guarantee you, you're going to find a friend who said, man, I was having a rough day, but thanks. I appreciate it. I needed that. And they'll give you the same love. I'm going to start doing this, I think. Instead of just doing it on my out of office email signature, I sign off with, stay safe, hug your family, and stay gold. If you get that reference, you're one of my people. Thanks for hanging out. Come back and see us the next time on Covering HOAs with One Hot Mic.